What is going on, guys? Today we have a very exciting video for you. We are going to be talking about Microsoft stock. So this is a stock that I do not address a lot on my channel, but I am an owner of Microsoft stock. And overall, what we're going to get into in this video is we're going to take a look at Microsoft's valuation. So right now, the stock has fallen quite a bit, but is it really at a great valuation, or is it still kind of trading high or middle of the ground? So that's what we're going to take a look at this video. We're going to look at the PE ratio, we're going to look at the financials behind the company, and then we're going to look at what are analysts saying about the company and where are they putting their price targets at. So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. We're going to start off by taking a look at Microsoft's chart. So what we're seeing here, right, over the last day, they're up a little over 1%. We had a big move on Friday as the market kind of started to recover after some of the CPI news came out, very poor. And then the market, reacted flat that day and then reacted down on Thursday and then back up on Friday. So a lot of kind of mixed feelings about the CPI report. But what I want to point out here first is their market cap. So they are almost at $2 trillion for market cap. I remember a couple of years ago when Apple hit $1 billion, or the first $1 trillion company to basically exist. And now we're looking at a lot of companies that are sitting around $2 trillion that have basically just doubled in the last 4 years-ish. So it's crazy to think about that. There's so many companies now that are over $1 trillion valuation. And then you have the PE ratio. So this is important. This is what we're going to look at primarily in this video. There's, again, a lot of different numbers. I did a video in the past where we looked at PE ratios and talked about how you have to really look across multiple sites, across multiple websites to get an accurate representation of PE ratio. Because a lot of these, especially if you're looking at forward PE ratio, a lot of these websites will have different analysts looking at their numbers and be giving different projections for the company's actual earnings over the next year. So again, you see a lot of variation in these numbers, but they're generally usually around the same. And then lastly, you have the dividend yield. So dividend yield, we're not going to pay much attention to in this video, but Microsoft has a fairly low dividend yield, but they do increase it gradually over time. So they are just under 1% right now. And if we take a look at the chart, so this is what we were talking about where, going into the CPI report, we had a lot of, negativity, and then kind of bounced back Thursday and Friday as the market kind of started digesting some of that information. And then when we look at the last 6 months, we could see that Microsoft is down over 15%. When we look at the last year, they're down just over 8%. And they hit a high, back in December, like a lot of these other big tech companies, of around $350. So we're kind of sitting, and that's how Microsoft is kind of looking at. So they haven't been immune to obviously the crash and everything that's been going down. They're down, from their highs around $100. So, almost 30, around probably 30% that they're down from their highs. So as I mentioned in the intro, we're going to take a close look at PE ratio. And right here we have my Yahoo Finance. And Yahoo Finance, personally, I use them the most. I think a lot of people use them, so you get a good, accurate representation. They do always have, a fair number of analysts covering their stocks, so you get a larger, sample to pull from when you're looking at companies. So overall, again, we have the trailing PE ratio, which I don't pay as much attention to. I pay a little bit more attention to their forward PE ratio. So their forward PE ratio currently is sitting at a 24.81. And if we look at the past, we can see, back in March, it was a 28. And then when we go back to December, they were at a 36. That's when they basically capped out, when they hit their all-time high of around 350. And then when we go back even further, they're sitting, around 31, 32. So what I want to point out with this is, we had a low interest rate environment back kind of in these 3 quarters. So it's not really the same environment that we're in right now. And that needs to be understood and considered when you're looking at companies, basically their valuations, right? Because as interest rates are lower, companies have more money to spend. Basically, they can get financing easier, they can finance projects, and basically advance the company's, objectives without, spending any of their own cash reserves. So they can borrow easy, and just everything becomes easier. So a lot of these companies will command higher valuations, and that's what we saw, all of, back half of 2020 and into 2021, the front half of 2021. So you need to understand that and basically understand that the valuation is going to change when interest rates basically change. So the question is, right, where we're sitting right now, we're sitting at almost a 25 forward P ratio. Is that a fair value? Is that a low value compared to, where interest rates are at currently? All right, so what we're taking a look at here is the Fed's interest rate. And what's crazy to think about and crazy to look at is how much it has changed in just a few months. So we went from, a quarter of a percent all the way up to 1.75%. So, and that's in a very short amount of time. When we look back at 2016, we can see how gradually the Fed increased their interest rates. And we are already almost at 2%. And, it took them a year last time to get up to, around the 2% mark. So it's crazy to think about how fast we're increasing interest rates. But, with the CPI data that's came out, it's kind of justified, when you think about what's going on with inflation. So overall, what we're looking at and what we want to look at is we want to look at how interest rates are affecting these companies. And how we're going to do that is we're going to look at a previous time period to where we were at right now. So right now we're kind of saying, okay, we're at 1.75, but in the next few weeks, we're kind of anticipating that the Fed is going to increase their interest rates by up to 1%. It's going to be crazy if they do that, but they are talking about potentially increasing interest rates by 1%. Otherwise, we might see another rate hike of, 0.75. So somewhere kind of in that range is what we're talking about. So if we factor that in, we're going to be around this 2.5 to maybe 2.75% interest rate. So with that kind of gets us back to, around this 2019 period. So we saw in 2019, interest rates get all the way up to 2.5%. So what we're going to do is we're going to jump over here and take a look at Microsoft over time. So this is Microsoft's PE ratio over time. We are specifically, just looking at from 2018 to 2022. And again, what we could see is here in 2019, we can see how the PE ratio was kind of sitting. So we were sitting around that 25, 26 mark. So if interest rates go up to around that 2.5 mark that we just looked at, we would say that it's probably a fair valuation to have Microsoft around this 25 mark. And based off that information, really right now, we're probably sitting at a fair valuation for Microsoft. I wouldn't say Microsoft is undervalued by any means, but I also wouldn't say it's overvalued. I'd say it's probably a fair purchase for the price and the PE ratio that we're seeing right now. The next thing I want to look at, though, is what happens if this kind of pending recession goes through. And what we've kind of seen in the past is what the Fed does is they will lower their interest rates. They start dropping the interest rates to make money more available and basically promote growth back into the economy. And what we've seen from Microsoft, even if we go back and look at this chart, we've seen, when the Fed last lowered their interest rates in 2020, we could see that, Microsoft was then commanding around a 30. A 30 would be a conservative number, and that's what we're going to look at. But they're commanding a little over, a 30 P ratio. So if we come back over here, what we're going to do is we're going to use that P ratio and the current P ratio to come up with a price prediction for Microsoft. So we have the price entered here of $256.72. That's where we are currently sitting at. And then what we have here is the current forward P ratio, and then we're going to again project around a 30 forward P ratio. And what that gets us to is we can run a little bit of math and basically come up with what the price target would be. So if the P ratio basically jumps back up to around this 30 number, we will be around $310.42. And that will equate to almost a 21% return. So again, the question is, would this happen? Are interest rates going to drop back down? And then if it does, is Microsoft going to still be in a position poised to, bounce up to a P ratio like this? I mean, I would feel confident in making that assumption, but those are just a few assumptions that you have to understand that are being made in this calculation. So obviously a 20.9% return over a year is pretty good. Over 2 years, still pretty decent, but once you're getting into 3 years, you're really only looking at a 7% return, and you might as well, stick your money in the S&P 500. So depending on, how quick you think this situation could play out, then that should judge your investment in a stock like Microsoft. As we always like to do on this channel is I like looking at what do the analysts say, what are they saying about this stock. So we have Microsoft stock here. I always tend to look at just the Wall Street Journal. They have kind of the best display, in my opinion, of actually looking at what analysts are thinking. So what we have down here is we have 37 that are currently saying it's buy, we have 6 saying overweight, and we have 2 saying that it is a hold. And what I always love looking at is where are their price targets at. So we have right now an average price target of $345.84. So that is over $30 higher than the price target that I'm saying based off PE ratio, which is very, very interesting. So there's a lot of very bullish analysts on Microsoft stock, and I don't blame them at all. The business overall, even during a recession, I don't think will be drastically hurt. You have a lot of businesses that use Microsoft Outlook, Microsoft Word, Microsoft PowerPoint, all their kind of platform. They've gone to a very subscription-based model. So they have a very stable, business model, but overall that's still, commanding a fairly high valuation to, be at $345. So we have a high of $400. So there's at least one analyst that thinks the stock will go all the way up to 400, which again would be a very, very bullish move. And then we have a low of $298.18. So still above its current price, but this is a little bit below, where my price prediction is at. So we're going to come over here and just take a look at this quick. So we're kind of comparing where we predicted the stock could go to where analysts think the stock could go. So again, we had $310 and the analyst median is $345 and 84 cents, or sorry, average is $345.84. So they have an overall increase of 34.71%. And again, I don't think that's at all out of the realm of possibility, but Microsoft would probably have to make a few moves, increase their earnings, which they potentially could just do by buying back the stock on their own if they think they're at a low valuation. And then basically that can drive up, the stock price. So there's a lot of good things about Microsoft. I think it's basically just sitting at a fair valuation. I'm not adding any to my portfolio in my opinion. The other good thing that I kind of wanted to touch on here at the end of this video is they have just an amazing balance sheet. So when we jump over here, look at the balance sheet, you can see, their total assets and their total liabilities. They have over, $100 billion in compared to assets to liabilities. And then if we go current, I always love looking at the current. Again, they have over 100 billion in their current assets compared to their current liabilities. So Microsoft is never going to be a bad investment, as they're standing currently as a company. But right now, I kind of just think they're sitting at, a very fair valuation for what their price is. And I think there's a lot better stocks out there that are undervalued. We could see one right here that I've talked about a couple times on the company. I think Meta has been super undervalued still. So overall, again, don't have any opinion on the stock. I plan on keeping my position in it and holding it for a long time, but I'm not really adding anything to my position. So I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.